Hello traders, welcome to today's live stream. It is Tuesday the 28th of January and there's been some interesting moves in the markets, a little bit of interesting stories to go over, so looking forward to talking through that today. For any of you that are new to the stream today, my name is Kibbler. I am the Senior Market Analyst here at 𝖢𝖣yiy. So I'm going to be taking you through some of the key charts. We're going to go over a lot of the current strength and weakness today. It has been a little bit of a volatile time for currency strength and weakness because markets have been pushed to pillar and post basically because of the macro situation and the fiscal uncertainties that have come with Donald Trump. So yeah, very interesting times. Let me know if you can hear me okay. I've moved my microphone. The microphone's a little bit a different place. I'm hoping the audio is still picking up okay. Might not be as crisp and clear because it is a little bit further away from me, but I'm hoping you can still hear me relatively well. I'll try and speak up a little bit. But welcome home. Hope you're doing well. Welcome home. Hello to you. Hope you're doing well. Ratish, welcome. I'm doing really well, thank you. Hope you are doing well too. So yeah, guys, as always, let me know what you guys are looking into today or for the rest of the week. Is there anything that's caught your eye? Let me know. Happy to have a discussion and chat around certain things. Obviously, the big story in the market at the moment is the whole situation with AI and DeepSeek versus NVIDIA, or DeepSeek taking on the AI, essentially the AI or the big tech companies at the moment, and really driving some doubts into minds of investors of how expensive it is to create these chips and to deal with a contribution to AI. So yeah, that's been the story of the past couple of days, which has really kind of rocked markets. Is then seeing Donald Trump come out, start talking about further tariffs. There was tariffs on Monday, potentially coming in on Colombia. They were taken back because we've got this scenario where Trump is now using tariffs as a tactic to kind of revoke people's visas and X, Y, and Z. So it's a very uncertain time in the markets, and uncertainty can produce opportunity, in my opinion. There was a couple of opportunities that I saw because of this, mainly was to do with the VIX. So I want to talk to you a little bit about the volatility index and how that can create opportunities as well in the market. So we'll talk about that. Good afternoon to you, Vincent. Hope you are well as well, mate. Right, let's get straight into the fun stuff. And by the fun stuff, I mean the economic calendar. Okay, not many of you probably enjoy this part. Let me know if you do. I'd love to know if you guys are like picking up on the macro because you're watching this channel, or you're here just to see currency strength and weakness. I'll be interested to know, because I could probably cut a lot of this out if you prefer just looking at the currency strength and weakness. I like discussing the macro. I think for me, macro drives markets. TAs kind of help you to time positions. But at the end of the day, you can just use technical analysis to get by. Let's talk about a little bit what's happened then. So some important pieces of data have come out. One of those being the manufacturing PMI in China came in a little bit lower. Wasn't sort of the story that kind of rocked the markets. I wouldn't say that really changed too much on Monday, just basically because there was more headlines out of Donald Trump. So, it didn't really have too much of an impact, which is quite shocking to say, really, because we usually kind of focus on China's manufacturing situation, and the fact that it has been getting a little bit better could boost a little bit of optimism when it comes to China. But again, tariffs took over the story there. We do also have a China bank holiday though, so maybe because we do have Chinese New Year going on at the moment, there might be an element that Asia markets are fairly quiet. So there could be a reasoning behind why we're not seeing too much into the markets at the moment when it comes to the Asia trading session. We do have a bit of data coming up whilst we're probably streaming. It's going to be the CB consumer confidence. I'm going to be taking a good look at that today because we do this is going to be a bit of an important move considering what we've seen on the stock markets recently. Like I said, the whole sort of DeepSeek AI situation caused a big ripple effect across markets. Saw volatility rise, which caused the sort of downfall in most stock markets. Did see a recovery to that. So I think that we're probably going to see stocks continue that recovery, because I just don't see how, again, it's kind of, you kind of think about it, how one story is really going to shape the narrative of AI, right? Yes, it was a big announcement. Yes, it was a shock, and it shows how vulnerable, maybe even how overbought tech stocks are, maybe even the sort of overvaluation of some of these tech stocks. And it just showed you that one small piece of news, really, or big piece of news to the market's regard, could shock it, and it could see investors bail out of positions. So that was quite interesting to see. But do I think that's going to be the story throughout the year? Not so sure. We'll probably see more stories about how AI is becoming cheaper. These chips are becoming cheaper. Why? Because there's just more adoption of it. There's just more people using it. And eventually that will lead to prices coming down, essentially. We do have some important data coming up this week. Big news week, really, considering the fact that we have 3 central bank decisions coming up as well. We have Bank of Canada. We have the Federal Reserve. This is the first Fed funds rate since Donald Trump took office. So that's going to be watched closely. I'm going to be very interested in what happens in the FOMC press conference on Wednesday evening. And then Thursday, we have the ECB, who are looking to cut rates by 25 basis points. So very interesting market this week. Typically, when I would open up the news calendar and see it full of this high impact data, I would immediately go to risk off. I would be looking at sort of US dollar longs. I'd be looking at trying to potentially buy into the Japanese yen. And I'd be looking to maybe go into things like gold. Have we seen those move higher? Not really. Japanese yen a little bit against sort of weaker currencies, yes. But we haven't really seen too much in sort of anticipation of like a big move in the market. Now, like I said, one big driver of the market move was this move on the VIX, right? I'll just pop that down for a second. Volatility index is something that I look at quite often within the market. So I just want to go to a daily chart. And we can see yesterday we spiked from high 14 to 14.8, and we spiked up to high sort of 22.5. So there was a significant shift in the market yesterday. We had this big spike of volatility. Now, I'm going to give you a little bit of a strategy here. This is something that I like to do. This is something that I try and take advantage of, okay? And I like to, well, as you know, the volatility index, it says there, volatility S&P 500 index, right? It's measuring the volatility within the S&P 500. So the thing to do, or something that I try to do, what's this? Update available, update to latest version. Okay, whatever that means. Just hide that out of the way. One thing that I like to do, I'm just going to compare the S&P 500. Now, you can do this over on the futures market as well. So if you go grab the volatility index on a futures market, and then we're just going to add the ES Mini, which is the S&P 500 futures, to the scale. I'm using futures at the moment just because obviously we talk about committed to trade reports and things like that. So I'm just showing you the futures chart. This works exactly the same in spot FX and CFDs. So what am I talking about? Essentially, what I look for is these spikes in the volatility index, because usually when we get that spike, we can see the stock markets fall, right? Then what I look for is that to basically reverse, because when you look at the volatility index, this is what you have, right? You have a market that literally just kind of like spikes up aggressively, comes back, spikes up aggressively, comes back, spikes up aggressively. But usually after a large spike in this volatility index, the market comes back. And what does that lead to? It leads to rallies in the stock market. Okay, so one big move here was obviously back in 2024, and we saw the volatility index rise from 14.15 all the way up into to the 2nd of August here, or the 4th of August, which was my birthday, up into the 37.25 area, right? So that was a big spike. How was that reflected on the S&P 500? Price came down. Okay, you can see that the purple line coming down there. So how can we take advantage of this? Well, after a large spike in volatility, what I look for is for the market to then start pulling back on the volatility index. What does that create? It creates nice bullish potential opportunities within the market. Okay, so that's something you can really start to look for. Now, what I would say is, because we are in, well, this is something that I'm going to really focus on this year. And the reason why I'm focusing on that is because of the sort of price action of volatility when Donald Trump is in power. So this is 2016. This was prior to 2000. This is the sort of run up to Donald Trump taking the election win in 2016. What I'm going to do, I'm just going to grab, let's see if I can copy that line up. Oh, I can't copy it for some reason. Right click, let's clone it. Let's go all the way to 2020, where Trump sort of left. I might already have this by putting Biden in there. Yeah, I've already got it there by Biden in there. But essentially, what we could be looking for throughout Donald Trump's kind of period in office is uncertainty, right? Tariffs coming in, him changing his mind on tariffs has been a thing that I've kind of noticed recently. He kind of talks about tariffs and then takes them away when he gets what he wants. So he doesn't technically impose them. He basically threatens other nations with them. Other nations kind of have to kind of come out of their deals. They don't have to, but you know, the US is used for a lot of purchasing and things like that, and a lot of countries rely on the US for safety. So you know, the US hold a lot of power in that sense and can kind of force nations' hands. So what Trump we saw on sort of Monday when it came to Colombia was going to cut the tax or add tariffs on Colombian goods, unless they did something for him, and they did, and he removed the conversation of tariffs around it. So what that's going to bring is uncertainty. What do we usually see in uncertain moments? Heightened volatility. So this is something that I would be looking at into this year, and what I'm going to be looking for is abnormal spikes in the volatility index. So we had this one in 2018. This was largely due to the impact that he was looking at tariff in China at that point. So that was basically the tariff on China, this spike here. But you can see how that impacted the S&P 500. The S&P 500 fell. In the aftermath of that, though, the volatility index started to kind of normalize, return to normal. Everyone kind of went out of that sort of era of fear, and look what happened to the stock market for a good run up. What we then did see is another spike, right? Obviously, this is a bit of a blip because that's 2020. This is COVID. Okay. But you can even see with COVID, right? We had a huge spike in COVID, so much uncertainty around that. But look, as soon as volatility started to just creep back in lower, stock markets went on to be one of the best performing ever in history after COVID. So this is what I'm really looking into this year, or even over sort of Trump's presidency. I'm looking for abnormal spikes in volatility. How does that reflect on the S&P 500? Can this be opportunities for us during these periods, right? You can see every time we get that little blip up, market spikes off in fear, but then it usually recovers pretty quickly. So one way we can even kind of look at this is look at recent times. Okay, so this was the huge spike up in August of 2024. Market spiked up quite aggressively. What did we see? S&P 500 roll over. Okay, what I'm looking for is these little abnormal spikes in volatility, okay, which can often lead to little bits of downside. Now, the recent reaction wasn't as big. So what I mean by that is it wasn't as aggressive as a lot of these moves that we've seen most recently. Okay, so we do have to kind of err on the side of caution when we see these big ones. But I'm looking at when we get these kind of aggressive spikes higher, how can that be reflected? Now, there's a couple of ways you can do this. So basically yesterday I ended up buying the S&P 500 down at lows. So if we just look at the S&P 500 here, this was the spike in there. Okay, that was the spike right down in here when the volatility index rallied. This was the spike on the S&P 500, and look, as it started to come back, you had this nice little move back to the upside. That slightly continued going forward. Doesn't mean that price is going to continue to rally. No, it doesn't mean that, but it can give you an opportunity when maybe you are fearful of getting into other markets because you can see that volatility is ramping up. Currencies at that point can be a little bit mispriced, or can be a little bit confusing, because currencies at that point might just be all over the place. When we go and take a look at this and you think, wow, what currency would have really benefited from that spike? It would have been the Japanese yen, right? So this is the Japanese yen futures, and you can see how well it performed in that volatility spike. Okay, but what happened when volatility came down? Markets sold off Japanese yen. So if we can go look at that in actual CFD terms, have a look at how dollar yen performed, right? Volatility index rose. What happened? We saw a huge sell-off in US dollar Japanese yen. Maybe you would have thought, okay, we've got lots of fear in the market, I'm going to start selling this. If you come into the US Open, for instance, yesterday, you would have been looking at this going, wow, yen is definitely a strong currency. Where's 230? There you go. So you might have been looking to sell US dollar yen, but what happened was volatility calmed down, market moved back to the upside. So really at that point, the move was already over, and it's really hard to pick out when you're going to get that volatility spike. The easiest thing to do is wait for the spike. Usually after that, we get that move down in volatility. Use your technicals and you can look for potential opportunities in that sense. So dollar yen's a really good parameter of that. If you do want to look at a currency pair versus the volatility index, then the US dollar yen price is very good at doing that. But just something I want to point out, this is something that I think can be valuable going into this year of trading because of uncertainty within markets. Hello everybody. So Ratish, like macro, gives a base for the technicals. Yeah, that's perfect. Ibrahim, welcome. Bongo, can you please so I can take a screenshot? Yeah, absolutely. Also, why did you stop showing the strength meter when it scores on your weekly analysis video? I miss it. Yeah, because the basically with the new branding setup of Blueberry, it wasn't accommodative to the branding, so it wasn't necessarily in there. So it's just from a branding perspective, unfortunately. But who knows? You might see it soon. Who knows? But here you go. You can feel free to take a screenshot. Let me zoom in for you. There you go. Let me know when you've taken that. But yeah, we can talk about currency strength and weakness. There's been a lot of change, and I feel like this is very familiar to me because of what I've experienced within the markets and what I've experienced with the currency strength meter is that in times of uncertainty, we get a lot of whipsaw in effect. And obviously this currency strength meter is built off of breaks in technical trends. And there was a lot of change over the past week or so. So when I look at what's really going on here, we can see that the euro climbed from 1 to +6. We saw that the Great British Pound actually was one of the better performing markets as well. Moved from -3 to +2, so a move of +5. Aussie went from -1 to 3, so that was a move of +4. And then we had Kiwi dollar, which is something I'm still happily looking to be a buyer of. Moved by +7. Dollar basically got trounced across the board. and I do quite like the idea of potentially selling it. That is a little bit of a risky one going into this trading week. I don't think I want to sell it this week. But yeah, CAD also fell, Swissy fell, and so did the yen. But yen was at +7, so that was technically in a reversal zone anyway. Dollar was also at +5. That was in a reversal zone. That already came down from the high 7s. So if you remember the week prior to that, it was +7. It's gone to +5, and then it got basically eroded last week. And that's reflected in the chart. When you go take a look at the US dollar index at the moment, you can see that, where is it? There we go. You can see that it started to fall away last week. If we go to a weekly chart here, you can see it had a very strong bearish weekly close. And that obviously led to a lot of changes in trend when it came to things like, if we go take a look at euro dollar, for instance, you can see that the market on euro US dollar, we had all these highs in here, right? And the market went and broke those highs, and it closed above it, which is more important for me. So close above, 2 closes above these highs. Technically this is now making higher highs and higher lows. But do I want to be necessarily aggressively buying this move this week? I don't think so. Just because of the outlook. We've got the US Federal Reserve interest rate decision coming up. We've got the ECB interest rate decision coming up as well. Do I want to be involved with either kind of events when it comes to trying to trade them? No, I'd rather wait till the aftermath and then look at what's happening within the market. So yeah, I don't think I want to be buying euro US dollar this week. I don't think it makes sense to do that. Yes, from a technical, you're probably looking at it going, this looks fantastic. We came into that 1.0 area. We've been looking for long opportunities because of the commitment of trader reports. You look at it from that weekly chart. Let me just put on the COP indicator here. You can see that it's in that sort of bullish area. So it's telling us that there is going to be a potential reversal at some point. We've broken through trendline resistance, which has been anchored from the highs that formed back in the end of September. So there's a lot of sort of factors here that suggest that the market is starting to turn, right? But do I want to go into that week thinking, okay, this is a good support area, I'm going to start buying from this support zone down through here? If I was blindly trading this and I was just using currency strength from weakness and I was just thinking about the technicals, then yes, that makes a lot of sense to be a buyer. You've even got this support here, markets aggressively moved into it, and then look at the last 3 candlesticks. That to me shows that there's exhaustion coming in at this level, which means that we probably will see a move to the upside. The only problem I've got is there's 2 high risk events this week. Do I really want to go and put risk on this move? Because where have I got to put stops? So we've got to be below here, so we've got to be below here. Where's my sort of reward in that case? Maybe up at these highs, back at the 1.06, which is an area I like. When we look at the weekly chart, get rid of some of these lines in here. I do quite like this area because you can see that it was a sort of top on the weekly chart, and the market came sort of crashing down there. So I don't mind seeing something like this happen. Okay, I think if we start breaking weekly highs, that's a whole different thing. That to me is a very significant switch in sentiment at that point. So I would much rather be looking for longs then. But for now, we're in this kind of middle ground. We're in this middle ground of, are we going to see that continuation of US dollar strength, or are we going to see the US dollar weaken further? Now, there's a couple of things we can kind of take into consideration. When we think about commitment of trader reports, right? What are the COT kind of signaling when it comes to the US dollar index? Well, I can see that from this free COT indicator that is on TradingView, or the script of it anyway was from a COT trader. You can see that this is showing that we should be potentially bearish. The last time it produced that signal was back in June of 2024, and you can see that the market did eventually roll over, and we're back in that similar situation, and we did come into the kind of key areas of 110. This is the highest level it has been since 2022. So, you know, all in all, yes, I do like the downside here on the US dollar, but is this the week? Is this the week to go and trade that? You know, does it make sense to go and put exposure on it this particular week? I don't think so. I think I'll wait for another week, see what the Federal Reserve come out with on Wednesday, see how they're positioning in the market, because there's one or two factors for me that could really drive things. Number one, the Fed are leaving rates higher at the moment because of the sort of risk that inflation could reignite again under a Trump sort of tariff market. However, when you go take a look at the CPI figures coming out of the US, they're actually coming in lower. Core CPI has been coming in a little bit lower as well. Trump's narrative around driving oil prices lower could drive consumer price index lower as well, and inflation. We know, I've shown you many charts of the correlation of oil and CPI in the US. So oil has been coming in a little bit lower. And I think if we do see that continuation, then the Fed might be forced to cut more this year than what they are currently saying they're going to do. I think they want to cut by 100 basis points by the end of this year. But if inflation starts rolling back underneath 2%, especially on the core side of things, then, you know, that to me would be, okay, what do the Fed do then? They have to do something, and because otherwise they risk deflation. So they don't want to go into that. Essentially, they don't want costs of goods and services to come down, because that shows, you know, significant lack of demand. So they don't want to see that. So yeah, it's a tricky little balance point at the moment. So that's why I'm interested in Wednesday. I'm interested to see how the Fed kind of discuss these type of topics, and you know, it's important as well for us to listen to what the Fed are focusing on. You know, back in sort of end of last year, they were focusing on the labour market. They were focused on the unemployment rate. That has started to come off a little bit. Now they could be focusing on inflation. So that gives us an idea of what kind of moves the market are expecting, or at least what kind of data points the market could potentially move on. So yeah, all things to consider coming up this week. I just think it's a very high impact trading week. It could be very difficult to find some decent trading opportunities. That being said, let's get on to some, because I've just ranted for a little bit. Good afternoon, Ryguy. Hope you are well. Let me just bring in then the currency strength meter, and let's go over a few of the opportunities that I've seen in the market. So I think for me, some of the big ones that I still like the idea of is, I do like Euro long. There is a commitment of trader report signal on that. So, you know, I do like the idea of continuing to look for at least some opportunities to be a buyer. So I am looking to actively buy euro against weaker currencies. Now, at the moment, that says that it's CAD, yen, Swiss, US dollar. Dollar I'm very wary about. So let's go take a look at some of the other pairs. One market that I did like the look of was euro against the Swiss franc. So the reason why I like this market was because we came into this kind of 92 handle area. You know, we saw a bit of a rebound. Price has now breached multiple areas of support and resistance. So it's telling me that really the sentiment here is starting to shift for Euro Swiss. Last week as well, we formed one of those lovely patterns that I like to look for, where you have that nice little sort of ascending triangle. And the reason why I love this pattern so much is essentially because you've got a very clear area of resistance. Market has come up, sellers got involved. Market's got up, sellers got involved, sellers got involved. But on the downside, buyers stepped in earlier than they did previously, okay? Or at least sellers got out, buyers got in, right? Sellers got out, buyers came into the market. So we had this really nice move higher, failure, move higher. So we had a higher low, higher low. Okay, so this is a nice sort of breakout pattern for me, and you can see that's quite a very familiar pattern. We then broke out of that, and the market did move significantly sort of beyond that point. So this to me now is a nice potential bullish move. We can see that we're in the potential secondary phase of this nice little breakout. When I look at the weekly chart, where could this price potentially go to? Where you've got these kind of highs in here, potentially these highs, maybe even the highs up there. So really speaking, we've kind of come into contact with these highs. The market did close above, but is now starting to come back a bit. So that high there to me has now become a little bit less relevant because price has already kind of tested it. So we're pulling back at the minute. If I go to the 4-hour chart, you can see it in a little bit more detail. Again, you had almost like one, another sort of pattern within a pattern, right? So we had that initial breakout, which came in here, which was from the sort of higher time frame pattern in there. And then it followed up by a smaller version of that on the 4-hour chart. Now we're in that pullback phase. So typically in a daily secondary phase, right, DSP we'll call it, in the daily secondary phase of a bullish trend, the 4-hour chart will make lower lows and lower highs. And that's what we've got right now. What I need to wait for is, do those lows continue to make lower lows, okay? Or does it fail? Does the market try and push this low here, fail? If it does, that could be a sign that the market's starting to go back into the primary phase, okay? So daily primary phase, the DPP, okay? So I'm looking for that potential move here on Euro Swiss. At the moment, it's negative. I can't do anything with that. That's not enough information for me to take a position on. But the Euro Swiss is definitely something I'm looking at. Another one of those was potentially Euro CAD. This had a very strong run up, broke through multiple levels. Weekly chart is a bit of a mess. Is a little bit of a mess. We had all this consolidation, all this volume being built into this area, broke down, found support at demand, rallied back, broke back within the area, which I'm pretty sure we talked about at some point as being a bullish opportunity. I was hoping it kind of stayed within that area, but it didn't. It kind of broke back within it, and it's broke back again. So this market is very, all over. Well, it's not clear, is it? When I look at a chart, I want to see what's clear. It's not very clear. Currency strength and weakness is saying yes, be a buyer of this, but I think I need to see more evidence of that. Maybe something. If we start to then slow down and we break out, something like that would be more useful to me. So yeah, Euro Yen was potentially another one as well. I don't want to sell the yen. I actually think the yen's going to have a good performing year this year. So I don't want to sell this. So sorry, I don't want to buy this. Sorry. So I don't want to sell Japanese yen. I don't want to be buying Euro Yen. So I'm kind of staying away from that as well. I think the currency strength for me, I might just be a little bit, all over the place because of what the price action has been within the market over this past. Look at that. Since July of 2024, this is a weekly chart. We've just gone sideways, Euro Yen. After a very strong intervention from the Bank of Japan, we've just gone sideways pretty much. You can see that on a daily chart as well. So do I want to be doing business with the market there? No, because where's my stop loss going to be? Here, here, here. Maybe the safest is up there. That's not what I want to be looking for right now. Yeah, in terms of, absolutely. So, I think for me, anything to do with Euro is wait for the ECB to come out, wait for them to give their comments, give their press conference, gives us a bit more of an insight into what they're looking for. So, yeah, anything to do with Euro, we've got to sit and wait. You could probably trade it beforehand. If there was a real clear-cut opportunity that you saw, that you think, yes, this is something I really want to get involved with, maybe on a lower time frame. So I know a lot of traders like to trade lower time frame stuff. Why not? But for me, as I'm swing trading at the minute, I will be waiting to see how this really does play out before getting involved too much there. Euro NOK also kind of floating around a little bit as well. So yeah, really speaking, Euro is meant to be bullish. Pound is an interesting one. I was looking at the commitment of trader reports, and hedge funds are starting to reignite their sort of long positions after being short for a good period of time. So I'm looking to see how that's going to impact prices. Last week we actually saw quite a decent move when it came to cable. Compared to a lot of other markets, actually got stopped on a pound Kiwi short last week. I was looking for the Kiwi to be a lot stronger than the pound, and I got stopped out on that position at the end of last week. But very similar sort of positions in the market. We had this nice move into this consolidation around about a 1.21 handle. Market then started to rebound fairly aggressively, but across the board, pound was actually one of the better performing currencies against the US dollar. So that shocked me a little bit, because although I knew we were coming into this strong support area, I didn't think the market would react so bullish to the UK data because of the overall kind of doom and gloom around the UK, which I still think is a big problem for the UK. But we've had this short-term move back to the upside. Do I think this will be a sustained move higher? I can't see that happening, but at the moment, the market is favouring pound. You can see it across the board. If you go to the likes of pound Kiwi, here you go. I had that bullish move. I was short in and around here. So I'll just show you where I was short from. Basically, what happened was the market was pulling back. I like this little area of supply. I said to myself, if price gets into this area here, I'll try and look for a short position. I did, and I didn't manage the position because we had good China data. Okay, so let me just go to an hourly chart. I'll show you where that sort of position came in for me. We had this really nice move to the downside on the Friday of the previous week. So when the market opened on Monday, I was looking for opportunities to get in, essentially. So I didn't manage to get in till in and around this little area here. So I ended up going short around sort of here. My stop loss was just above these swing highs, and I was looking for price to kind of target. It was around about 2.5 to 1, something like that. In and around this kind of large area, because that to me is a big area of volume. And if you actually go and grab like a volume profile over it, you can see that the point of control of that was around 2.15. So I was looking to try and target that little area there. So I actually got stopped on the Friday evening. Really weird day, because on Friday we actually had positive data. Say positive data out of China. It's positive news for China, and the market sold off, which was great. But then we had the UK services and manufacturing PMI, which came in higher, a lot higher than expected and anticipated, and the market just reversed. So unfortunately for me, in hindsight, when I review my trades on a Sunday, what I really should have done is taken off a position here at these lows, because we can see that buyers were coming back in. I really should have taken a position off as we were breaking into that lows. I should have moved stop loss down to break even, and then I would have been okay with the outcome there. The only reason why I didn't do that and take that position off is at the time it was just below a 1-to-1. So I was being a bit greedy. Trying to wait for price to actually make that 1-to-1 and then try and get out of it. But that's not what trading's about. The market's not going to do what I want it to do. It's going to do whatever it wants to do. So unfortunately for me, that was the scenario there, and the market stopped me out. The only other trade I had last week was a silver position long down in here. So I ended up being a buyer of silver. And then, yeah, this spike here took me out. So the reverse side, really, I got in down at this area here because I like the idea that price was finding support. I'm pretty sure it was off this candle on the Monday. Stop loss was in below the lows. Target was up at the highs. I ended up banking half of the position here, moved my stop loss up below this candlestick low here. Okay, and then yeah, data came and stopped me out. So those are my 2 trades of last week. So ended up still technically down for the week, but it wasn't like aggressively down. I like the idea of being a buyer of silver because of the COT reports and things like that. We had this really nice sort of double bottom that we bought initially, and you know, the market continued higher really nicely. But since then, it's just gone a bit flat. It's gone a bit stale here for silver prices. When you compare it to gold anyway, you know, gold has continued to kind of ramp up. But yeah, unfortunately for me, it was a losing week last week. But you know, this is saying sell dollars. I don't like the idea of doing that. We've got a BOC rate decision coming up. You know, Swiss franc, I like the idea. I think one market that we did talk about was Kiwi Swiss. I know someone's asked for Kiwi CAD, so we'll go take a look at that. But Kiwi Swiss and Kiwi CAD. So what I was waiting for on Kiwi Swiss was this close, essentially, this nice breach of the trend. When you go to the daily chart as well, we had a good sort of breakout of those highs. And what I said to you guys was, I want to see a close above these highs in order for me to consider starting to buy into a position here. And it hasn't worked out. We had a nice bullish close, but then prices come all the way back down. So really speaking, that could be classed as a false breakout because I didn't get 2 closes above these highs. Okay, and that's what I look for a change of trend. I look for a minimum of 2 closes above a high or 2 closes below a low in order to be to consider it a change of trend. And we didn't have it. Market did break those, came up into this kind of minor resistance level up here, 51.75s, reversed. So not for me at the minute. Not for me at the minute. I don't like the price action going on. Again, it's been a week of uncertainty. What does the market go and seek in uncertainty? Goes and seeks some safe havens. Swiss franc, yen, things like that. Swiss franc in particular has been bought up quite a bit. Kiwi CAD. So looking for a long. Yes. So currency strength for me is saying that we should be looking for longs in this market. This one's a little bit different. You know, you can see that although we're in that kind of downward trend that has been, we're in the secondary phase of the bearish downward trend. Okay, so the way I'd be looking at that is, grab a tool here. We have our high, we have our low, we have our lower high, and we have our lower low. So it goes like this. Okay, we are in a secondary phase now. We know that because of the fact that this candlestick here is breaking previous week high. It closed above the high and the low of that week. So we know we're in that secondary phase. In those conditions, we should see a bullish trend appear on a lower time frame, that being either the daily chart, okay, which is the breakout there, or a 4-hour chart, which is higher highs and higher lows. So what we've got to look for really now is a higher low. Where could that higher low come in potentially? And you know, how could we look for that change of trend? So at the moment, do have a lot of action around this area. You can see lots of buying and selling going on here. Sellers won here. Price came into this recently. Buyers got involved, right? So big move up. Price is coming in. What do we need to look for here? We need to look for change in trend options, right? So when we go to our 4-hour time frame, what do we have at the minute? We have price breaking, making new lower lows and lower highs. If you want to look at it a little bit cleaner, look, you can see the hourly chart. We have head and shoulders pattern, markets trading lower. So until this changes, okay, I wouldn't do anything. I'd be looking to see maybe if price does this, okay, then I'd be like, okay, this could be an area where I'm a buyer of the market, and look for any kind of bullish candlesticks around there, and you can start looking for a bit of a move higher. Okay. Got stocks out of pound Kiwi as well. Yeah, it made sense to get into that market. For me, it made sense to be a buyer of that market, a seller of that market, but it just didn't work out. It's just one of those. It didn't work out for us. But yeah, pound has actually done pretty well. If you look at pound Aussie, starting to break higher after finding consolidation here. I was just looking for a little bit more out of those markets, but turned. Pound Swissy remains fairly range bound. So, and pound yen had a good move up as well. I like the idea of selling pound yen. I must admit, I think pound yen is a good idea to sell. We talked about this in depth, last week on sort of our opinions of why that is. I think the yen economy is getting stronger. If we have a quick flick over to, I'm trying out some new software as well, guys. So this is barchart.com. Basically, I'm looking to build my own commitment to trader report indicator. So I'm testing out a lot of commitment to trader report indicators at the moment to see if there's anything that I've missed, to see anything that's fairly useful. But what I'm using at the minute is Barchart Plus. Okay, so you can see here we've got currencies. This is the first day I'm using this, so I'm very new to this one. But they've just basically got the report here. They've got the non-commercials, which are the large speculators, which essentially is who you want to be following in the market. And now if we look at the Japanese yen, okay, we can see that they're actually, so this is the 52-week change. We can actually see that they're buying, hedge funds are buying into the Japanese yen, right? So what is the change in terms of positioning? It says minus 14,000 there, but the net change has been plus 14,738 contracts. Long positions 94,000, short positions 108. They are reducing those short positions, right? So that's the change from the previous week. Long positions change is they're adding into those positions there. So I like this at the minute. I think this is a good market to have a little look at. Obviously, net positions is the total of long positions minus the short positions. That's where you get the total positions in there. But yes, hedge funds are buying into the Japanese yen at the moment. So I also want to be doing that. They are shorting the Swiss franc. You can see that here. Okay, when you look at the 52-week change, they're shorting it. So yes, I want to be a buyer of yen, seller of Swiss franc. So, one market we did talk about was Swiss yen. But, this market has kind of been back and forth with me a little bit. Again, my target wasn't too far away. I ended up banking some of this position. I left the remainder open. I'm actually still in this, and the market came all the way back up into this area, I guess, of sort of supply, right, and then rejected, and it started to kind of push away again. But again, I quite like the idea of selling Swiss franc versus the Japanese yen. I think this is a market that could potentially trade lower. And I'm looking to try and capitalize on that still. But I've already took some out of that position. If anything, my stop loss now is here. Sorry, let me move it. My stop loss now has been reduced. That's where my stop loss is now on my trade terminal. But yeah, look, you can see we broke trend again here. I think this is a favorable one to the downside, in my opinion. I like the idea of being a seller. So I'm trying to get to the daily chart, the seller of this market. So yeah, I like this one. Let's just flip back to pound yen, because I can see that we've come up into that actual resistance zone. This is something we spoke about a while ago. And we have started to kind of give off a little bit of bearishness here. Let's have a little look at that. I mean, I quite like this. I quite like this change. if we look at the 4 hour and we kind of consider what's going on, you know, we were in that bullish phase, right? So you got higher highs, higher lows. Market has come in, didn't break into new lows, right? But closed on those lows, which is something I like to also see sometimes. You know, is this going to be a head and shoulders pattern, right? So you got the head, sorry, you got the left shoulder. Is this the right shoulder? You know, is that going to be our point where we start looking for some downside on the pound yen market? You know, potentially, because I do like the idea of buying yen. I'm not a big fan of buying pound, although the data's come out is good. I've seen that there's some remarks from Keir Starmer saying, you know, the UK economy is looking up again. I don't buy it. I think there's a bit of mispricing going on there. So, quite interested in this move here. That nice little 4 hour breakout there is interesting to me. The fact that we've come up, retested this area as well. This little area here. Yeah, I like this. Let's just have a look at this in terms of risk reward. So let's say we would have got in on the close of that 4 hour chart. Where would our stop loss have been? I think above that swing high would have been fine. Target for me would be down at these lows. So I mean, it would have been a lot better to try and get in a bit higher up. We don't really want to be trading short beyond this point here. Let's have a look, because my overall target on pound yen is down here from previously. How does that look from an end of day play? Risk reward there, I don't think is that great. The market's got to do a lot of work for that. I want to put an alert around 193.50. I think now we've got this sort of break in. We haven't had a clear-cut lower low form from this, but I like the fact that we've breached this trend line, potentially kind of giving us a bit of an insight that the market could start pushing back lower again. If I just pop a fib on here, let me just revert the fib back. Apply defaults. Here we go. Let's go the other way on that. One big thing for me is if price closes below the 0.236 fib, I feel like that can create a potential reversal. Essentially, the retracement has become too deep in my eyes at that point. So this is an interesting one for me because we've closed below there now. Market has come up. We're starting to see a bit of selling again. So I'm going to pop an alert at 193.60. And if we do get a move back into that area there, I'm going to have a little look on my lower time frame. I'll probably go to an hourly, maybe even a 30-minute. And I'll have a look for any kind of breaks in trend at that point. Because that could give some insight to a little bit of downside there. I don't see the... Have we got much pound data coming up? We've got BOE governor speaking tomorrow. Other than that, there's no UK data. Now, the UK is kind of been, it's bid because of what happened last week. Go and have a little look. Last week, climate count change came in significantly lower, like ridiculously lower, which was good for employment figures, which kind of gave a little bit of a boost. But it was really this one here, flash manufacturing PMI and services PMI. The UK is a service-based industry. But you can see, basically we had no chart there to show you, but flash services PMI beat expectations, came in at 51.2 and beat previously. Maybe that was revised. That was revised down from 51.1 to 51.4, but beat forecast by a big way, and ended up beating the previous number there. So that kind of surprised the market. It's why we're seeing pound boost a little bit, but I don't think that's going to help us in the long term for cable or for pound in general. So I do quite like that downside there. Pound CAD starting to come off at these resistance levels, but that's gone a long way. I don't trust that price action. But pound yen I like. Good trade, Swiss yen. Ibrahim's afraid to sell. Don't know why. Pound yen is so fast. Yeah, for me. So you've got your own ways of trading, obviously. But well, I hope that you've got some kind of system that you've got sort of proof of, it working. Essentially, how I see markets is you have these kind of trends within phases, and they change, right? Especially when I'm looking from a swing trading point of view. You can go into other things as well. If you have it available to you, I think some good things to look into is like market profile, volume profile. I do find a lot of value in those, especially when we've been through periods on the channel where we've talked about value area highs, value area lows, and how that can kind of show you the sentiment of the market. It's a little bit harder to use in Forex markets because you do have the cross. It's harder to get centralized data when it comes to that. But essentially it can be valuable. The way I see the market though is that you have these phase points, right? So, and I talked about this last week on pound yen. We've highlighted them here with these little circles, right? When you get a market that is trending, and that's how my currency strength meter works, it shows me that there could be trends, and that's what I want to try and trade. You have these points where the market makes a decision, and it makes a decision to switch. So in the bullish trend, it makes a decision that sellers start to fade out and buyers start to take over, right? In the primary phase, you've got a lot of buying going on, and then sellers take over, okay? Or buyers become exhausted at that point. So they start to get out of their positions, which causes selling pressure. Here we have a similar situation. Market makes a new lower low, lower high, and we have this move down. So we were looking at potential short opportunities at some point to come on a change of trend. So the secondary phase for me is almost like my alert. It's like, okay, the market that you want to be involved in is pulling back, like this example here on pound yen. And what we saw was, on the daily chart, it was in the secondary phase. On a 4-hour chart, it confirms it by creating a high, higher low, and a very, very minor higher high. I wouldn't say that's like a strong confirmed, because I would like to see 2 closes, but we did get the higher low, right? And you can see that the market then broke that trend and continued to trade lower into the next sort of support level. I always like looking at the next low. So there's 1 or 2 things that can happen. Now I've highlighted that area. So on a daily chart, you can see it's pulling back. 4-hour chart, we have a break of trend line. That could be a good entry point. Hourly chart, if we go back, you can see that starts to show a nice little break, and then you've got a lower high, lower low, lower high, lower low, lower high. And until that really changes, the market is pushing into that downward phase. You can go even lower than that. I don't like to go lower than this, especially in January, but you can see that we start to kind of fade out of that move. The market starts making higher highs and higher lows, but it starts to become sort of stalled at that point. It's kind of resistance here, I guess, as well. And then that starts to break trend here. So early sort of warning that the market is going to break down is that kind of breakout point. So the way I enter the market is by looking for those changes of trend. And then it's up to me how I enter that to try and get a stronger risk reward ratio. At the moment, I've been trading a lot of 4-hour trend stuff. So for me, that break there would have been good enough. The close would have been good enough for me. I could have sold that candlestick, put my stop loss above the swing high, and look to target the next low, right? So it's only a 1.4R trade, but you kind of get the gist there. If we have a little look at what other trades have I taken recently, I went Bitcoin long. Silver, right, we'll have a look at silver. Silver was a good long for the start of the year. When I have a look at silver, I was having a look at sort of the weekly, and I was even looking at the monthly chart, and I was like, look at this kind of bullish trend that's been developing. On the weekly chart, we have this really nice demand zone where buyers really aggressively got involved. I also had the backing of the commitment of trader reports at that point. But if you're looking at it from a weekly perspective, it's about just understanding what phase of the market you're in, because look, market, lower low, lower high, lower low. So technically, from a technical standpoint, that could be a beginning of a downward trend, right? But I want to be a buyer, and we've come into an area of demand. This could be an area where, like obviously I didn't know it was going to be, but this could be an area where the secondary phase of this move starts to form. I know from experience, and I know from highlighting loads of secondary phases, loads of primary phases within the market, or a pullback phase, you might be more familiar with that, or retracement phase within the market. I know it can create trends. So all I looked for on a daily chart was a break of that, essentially. I did get into this one very early, because what I saw was this nice little double bottom pattern, and double bottom, double tops are like my favorite patterns to trade, because what it shows me is buyers got in, they came back into there, sellers couldn't break beyond that, and then the market went higher. Understanding the phase that I'm in a secondary phase, potentially on the weekly chart. That's a primary phase on the daily. What would that create? It would create a downward trend on the 4-hour chart. Lower lows, lower highs after breaking that consolidation. Okay, what I did was I looked for a break of that, which was that candle there. I bought this candle, stop loss below the low, market went higher. Similar to what happened over here. I was then looking at, okay, I'm in the secondary phase of the weekly chart still, but what does that mean? Higher highs and higher lows. So again, if you go look at a 4-hour chart there, you'll see that the market is broken into new lows, taking out all these. Okay, nice little trend line across there, break a trend line, happens again, market comes in, break a trend line, market moves higher. Okay, so for me, it's the way I trade is like studying those type of moves, right? So I always kind of think about it in a way of, my dad always says to me, my dad trades as well, and he always says everything is fractal, right? Everything is fractal. So you may have a daily chart here, which is this black line, and then within that you have a 4-hour trend. So you have the market that's making lower lows and lower highs, and then on a secondary phase, higher highs, higher lows, and then lower lows and lower highs. Okay, now obviously it's not as easy as that, because we know there's all other elements involved in it, but then within an hourly chart you'll have trends within that. So within that there'll be a little downward phase, little bullish phase, little downward phase, little bullish phase, downward phase, bullish phase, and it just starts going like that, right? So for me, it's how do we spot those turning points, because that's where we get those kind of larger areas, the higher risk reward trades, in my opinion, is how do we spot those points. And there's usually some kind of turn, in the trend. There's usually some kind of pattern that forms. There's usually something that determines that move. And if there is, that's how I like to kind of get in the market. Would I sell dollar Swiss at the moment? No, because I don't want to buy Swiss franc. Again, if you look at the weekly chart, no. Again, that's kind of again, try and understand what type of phase you're in. So this is a bullish trend, a very strong bullish trend, I would say as well. What phase are we in? We're in the secondary phase of a weekly bullish trend. That's the primary phase here. This is the secondary phase. That's the primary phase. Okay. Secondary phase, that's going to create a downward trend on a lower time frame. So if you look at your daily chart at the moment, what are you getting? You're getting a move down, lower high, lower low, lower high, and a new low form. So yes, this is bearish from a daily time frame perspective, but from a higher time frame perspective, this is a very bullish market. If I look at the 4-hour chart here, that to me doesn't look too bearish in my opinion. I like the idea of selling US dollars, but do I like the idea of selling Swiss franc? Buying the Swiss franc? No. I like the idea of selling Swiss franc. So if anything, I'm a little bit leaning still more towards the bullish side of this. I'm looking at this weekly chart. That to me there, if that closes like that on the week, I think this looks pretty good for a long idea. Same with dollar Swiss, the dollar yen. I like the idea of buying Japanese yen, but do I like it against the US dollar at the moment? No. I don't. This trend looks very clean to me. And although my currency strength meter might be saying get involved with this short, the conditions aren't there to do it. Okay, so remember as well, always think about your WCS method. WCS. Why do you want to be in that market? What are the conditions around that market? Does it match the why? And what is the strategy that you can use to try and take advantage of it? Okay. Why do you want to be shorting the US dollar Swiss franc at the moment? Why do you want to be shorting dollar yen? If you can't answer it, that's absolutely fine, by the way. That's absolutely fine. Because if you can't answer it, it's probably a market not worth trading in the first place, right? Why do I want to, almost sell US dollars, buy Japanese yen? Can I justify that? Can I justify this right now? I could justify this side because BOJ are increasing interest rates. We've got inflation that's climbing higher in Japan. Lower oil prices could be a big help for Japan's trade balance. If we were to see lower oil prices, that's basically good for Japanese businesses as well. So there's a lot of positivity in Japan's economy. Also, BOJ have already stated that if they do see increases in inflation, things like that, they will act further. Forecasts are suggesting that we're actually going to see a rise to nearly 1%, which is a rate we haven't seen for a very, very long time in Japan. So that makes sense. Can I say there's a lot of reason to sell the US dollar right now? No, because I think if the trade tariff narrative comes back, then the dollar could spike again. Yields could spike higher, and that's going to be positive US dollars. So I can't answer that. So I would ignore that part of it. If you could look across the board and say to yourself, okay, where am I going to benefit on certain things? Maybe you could look at the New Zealand dollar. You're committing a trader report signal. We know that hedge funds are selling New Zealand dollar at levels we haven't seen in history. Could that unwind? And if it does unwind, where would that be impacted the most? So that's what I'm trying to kind of play on at the moment. That's a good why. Kiwi Swiss could be a good version of that. Kiwi CAD maybe. CAD starting to unwind a little bit against major currencies. Japanese yen, not so much, right? Not so much. But maybe we could look at I'm going to say pound Kiwi. I still like the idea of shorting pound Kiwi. Yes, I lost the trade on it last week. That's absolutely fine. But I still like the idea of potentially shorting this market. The conditions aren't there for me to do it right now. I like this consolidation down here. I think that this is a good area for the market to go and target. So I still like this move. It's just I've not got the conditions to do it anymore. The conditions were okay here. They were good. Conditions not so good to do that. So the only thing I can wait for now is maybe this area of kind of resistance and see if there's any kind of downward move from that point. So yeah, hopefully that made sense. Guys, we've been running for 1 hour and 11 minutes. That's a little bit longer than I usually go for. I'm going to leave it there. I will speak to you again soon. I'm not going to be around on Thursday again. How do we tell where there's a signal for the cut report? So there's a few ways that you can do it. I'm trying to build my own one at the moment so that I can kind of show you. But there are many ways. So obviously, I'm a big fan of using Markets Made Clear. I've showed you many reports using that feature. But it's essentially, there's kind of two ways that I see it. It's when hedge funds become very aggressive, right? And then what they do is they unload those positions. So the signal for me is where you've got hedge funds being aggressively, let's just say for an example, they're aggressively short on New Zealand dollar at the moment, okay? Commercials, the guys that are in it to hedge, they are aggressively long. The reason why is because prices are so cheap at the moment, so they will go and kind of almost stockpile New Zealand dollar because it's cheap to do so. But it becomes a point where hedge funds can't sort of push the narrative too much. So they start to unwind their positions. That's where the signal is for me. It's when the market becomes too overexposed in one direction. Really good one that we saw earlier this year was in September, which was the US dollar one, right? I've got it marked up here. Here was a real big turning point where we had hedge funds aggressively short the US dollar. We had commercials aggressively long at levels that we hadn't seen for a very long time when it comes to buying. It was actually the last time we had a bullish signal was back in 2023, the end of 2023. So they were at similar levels as they were here. What happened then was market started to break trend at this point, and we had a huge reversal in the move. But there's many ways you can do it. I'm going to show you a couple of free ways to do it because I just think it's always better to show you free rather than paid, because you don't know if you want to use it or not, right? So cut reports is a very simplified way of doing it. You can have, it's just basically a color-coded system. But this is a really good example, right, of September and October. So you can see here, so what it's basically showing us is you've got the date, you've got the long positions, you've got the short positions. Now this is the non-commercial, sorry. So see here, non-commercials. Okay, so this is our hedge funds or large speculators. Let's put hedge funds in here. Now, what were they doing? They were getting aggressively short in September and October, right? And you can see that reflected via the long contracts here. Okay, you see that reflected there. They were basically decreasing long positions at aggressive rates. They were increasing short positions. Okay, so on a kind of net position change, it was quite aggressive, right? They were very aggressively short at that point. You can see in the open interest as well. Open interest was also very nicely color coded that it was bearish. And then after the fact, once they started unloading those positions, you can see that they started to build long contracts, and that's what they've been doing. They've been buying the US dollar. When you look at the short side of things, yeah, they've also been increasing their short positions. But around December they started to unload those short positions, right? So that's why it's highlighted green, because it's basically saying it's bullish for US dollars because they are decreasing short positions and they're increasing long positions. So when you look at the net position change, very bullish in here, right? You can see very, very bullish throughout that period there as well, through June, July, blah, blah, blah. Okay. So that's a good one. At the moment, when we look at the euro, look at the euro, right? And this is why I'm so interested in buying the euro, is the fact that look at the short position and the short contracts being built up by hedge funds at the moment. They are shorting very aggressively. 31st of December, they were short at 238,000 contracts, okay, which is the biggest number we have seen for nearly an entire year. Just looking at this number here, I'm trying to see if any of these numbers are 238. So that 31st of December was a big moment. So when they start unloading those positions, that's when you can often see a little bit of a change around. And as you can see over the past kind of couple of weeks, their long positions have started to increase a little bit. Their shorts have started to decrease. And you're starting to see that sort of move back. All right. I'm going to try and build my own one. I think that, you know, for me, just kind of show you guys how I view it, it's worth me trying to build my own. And I'm still trying to do that in the background. And once that's ready, I'll let you know. So keep asking me, because it gives me a little push to continue to sort it out. So, right, I'm going to leave it there, guys. Thanks for your attention today. Really appreciate it. If you could support by giving it a thumbs up and subscribe if you are new, if you haven't subscribed already. That would be great. I will speak to you on a live stream next week. I'm not going to be available on Thursday, so next Tuesday I'll speak to you. We'll go through the whole process again and have a little look at if there's any changes in the market. So thank you all for joining me, and I'll speak to you very, very soon. Cheers.